Good evening, guys. It's Saturday, January 21st. My name is Dave Coker, and this is Talking About Finance. And wow, what an awesome evening. It's a wonderful time. It is so incredible to be able to speak with you on this channel. On this evening, my friends, our time has arrived. For far too long, we've seen money given away for free. This era of free money has come to an end. And now that capital once again has a cost, now that money is no longer free, we are beginning to see a change, a profound change from the past 10 years. Now that capital has to pay its way, and this means an end to what many call the financial profligacy of the past decade, the financial idiocy of the past decade, when all sorts of garbage ideas and concepts, money-losing enterprises found funding, launched, and rapidly became unicorns, while well-thought-out businesses that we might invest in, enterprise that generated positive cash flow from year zero, struggled because they didn't actually generate returns as high as what was promised from these other ideas, what we're now calling the paper unicorns. Well, my friends, the Fed has increased rates some 475 basis points in 2022 alone. And by doing so, they have declared the era of free money is over. Many haven't noticed this, but we have. Our time has returned. It's the era of sensible investing. Invest only for cash flow. Invest only in money profit generating assets. Try to get paid for buying assets and take a risk instead of letting free money bail us out. So let's talk about finance. And last week, the S&P 500 was down about 27 basis points on the week. We can see that we had 4 sectors up: communication services, infotech, energy, and consumer discretionary. 7 sectors were down. So let's look at the winning sectors and try to see how we can position ourselves to make money. The VIX traded up to 19.35. It started the week at 18.35. Slight bounce up. Still, the VIX is frighteningly low. I've mentioned before, many suggest we need it to spike to 40 or so with a big equity market blow-off before we can call this a tradable low. But people like us, we don't care. We invest only for dividends. So I say, buy your stocks, sit back, get some popcorn, watch the fun. The 10-year note closed the week at 3.48, flat on the week, down about 0.4% year to date. Oil closed the week at 81.73. It's up about 2.3% week on week. Now it's down about 1.8% year to date. So we're on our way to a new year. Lots of opportunities to make money. You just have to be flexible. You just have to adapt. You just have to change to meet the new macroeconomic environment that we find ourselves in. The old days are not coming back. So let's see what me and my buddies, about 50 or so bankers, retired bankers, 100% self-described money freaks, talk about all week long on a private Telegram channel. And as you know, I bring what I like the best to you on this channel, so hopefully you like it too. And if you don't like it, come back next week to be offended again. This is what it's like, guys. This is real finance. So let's go. 7 slides for 7 days. And first of all, we see that people that track these things have noticed the retail investors that piled in over the past 2 years, the newbies, has sold all the stocks they bought during the pandemic trading boom. Once again, we're back to reality. The adults are fully in control. And this is going to change things in a very, very profound way. But still, there is some pain because markets, according to the Buffett indicator, are still somewhat overvalued. Not as bad as they were about a year, maybe 18 months ago, but still they're above the trend line. And that means we're going to see some short-term corrections. It's all about paying attention, guys. And if you position yourself properly, you'll be okay. And this is a really interesting one because people are not thinking about this the way that I have been writing it up in research notes. Saudi is going to de-dollarize. We know Russia's de-dollarized, China is rapidly de-dollarizing. How many other countries are de-dollarizing? Well, I've got a long memory, and check this out. Go back and read the history, guys. Don't take me at my word. But when Libya tried to de-dollarize and tried to price oil in currencies other than US dollars, well, we all know what happened to Libya. And, you know, Gaddafi had his issues, but the simple fact of the matter is there's an awful lot more than people catch on when it comes to Libya, Gaddafi, and de-dollarization. I'm not sure how this is going to end with Saudi. It's going to be very fascinating to pay attention to it. It's really important you pay attention to this because the dollar will weaken, and that will benefit assets that are priced in dollars, such as gold. And when we take a look at gold, one thing I love to bring to people's attention, of course, at university we teach about efficient markets, but markets aren't efficient, guys. They're just not. Take a look at gold's seasonal prices. And once again, if markets were efficient, everybody would know about this and it would be priced in. And yet we simply know that if you buy gold in January, out of the past 20 years, this is what we're looking at, monthly returns over the past 20 years, 2003 to 2022, and we're asking a very simple question. How many months over this 20-year period did gold close at a higher price than it opened? Well, it turns out in January, 65 months out of the total sample, gold closed higher. Really interesting to take a look at this. Up some 3.1% over that period of time. Same thing with July, up some 1.7%. August up some 1.6%, November up 1.7%. Turns out that in March, sold off. September sold off. October sold off. So yes, markets are not efficient. Gold exhibits seasonality. Just the way these markets work, guys. And you know, I'm going to tell you something, although I'm kidding. But I half tempted to dump all my Bitcoin and go into ags. Look at this, over the past year, ags were up an amazing amount, almost 200% since the beginning of 2022. Absolutely incredible run up in the price of ags. Yeah, that's what inflation does. How can you protect yourself? We can go into other assets. We can go into gold. We can go into silver. We can go into rental property, what I like to call tangible, real, physical assets. And I've advocated people buy those for a long, long time. We can also move some funds, some capital into Bitcoin. And this Tommy Mustache, I haven't seen his work before, but then once again, getting a good look at this, we can sort of see he's got this hypothesis that we have up years and down years. And you can see silver's got, what am I talking about here? Oh my God. Bitcoin's got this regular pattern. Few up years, a down year, few up years, a down year. What's 2023 going to bring? I don't know. All I know is every week I buy Bitcoin. I've been doing that for years. And I'm wondering if there's any other members of the below $100 club here. Yeah, guys, I don't really have a lot of big money invested in Bitcoin, but I have a lot of wealth in Bitcoin because I've been buying it regularly for many, many years. And you should give it a try. Only 19.27 million Bitcoin out of 21 million Bitcoin have been minted. I do believe, which is why I buy Bitcoin every Friday, I buy the same amount of money, I invest the same amount of money into Bitcoin every week. I do believe there's still upside to Bitcoin, otherwise I wouldn't be buying. I might be selling. I'm not selling. Absolutely not. And here's another puzzle that doesn't really make sense. When Bitcoin was priced at 17,000, when I suggested to people to buy it, no, I'll wait for it to go lower. And yet when Bitcoin runs up, when we saw the record high north of 60,000, people were lining up in major ways. Major queues, as the British would say, to buy Bitcoin. Guys, dollar cost averaging, buying regularly, buying once a week, every week, you can't go wrong. And as you know, about a year ago or so, I started buying Ripple again. Still waiting for that court case to finish in our favor. Those are the only two cryptos that I own, although Bitcoin's not a crypto. But let's call it that for now. I don't own anything else. I think personally, All the other ones, there's a reason why they're called shit coins. Altcoins, don't go near them. Buy yourself Bitcoin. Buy yourself Ripple. Those are the only two that I'm holding. And don't go crazy. Put a sensible amount of money in regularly. Do not invest a lump sum. Buy $10, $100, whatever. Every week, every month. Just be regular about it. I do that for both Bitcoin and for Ripple. Okay, guys, that's it for this evening. I hope you found it useful. It's been wonderful chatting with you again. Once again, buy dividend-paying stocks. Use the cash flow to buy more dividend-paying stocks. Divest. Diversify into tangible, real, physical property. Gold, silver, rental property. That's what you need. And Bitcoin for fun. We'll always have Bitcoin. Take care, guys.